Good morning, friends. Today I'm going to explain the difference between future contract and equity stocks. Easily we can understand if we trade or if we place some orders, it can be easily understood practically. So I'm just going to explain quickly the difference between equity stock and future contract. First difference I have noted down is that in case of equity stocks, we can buy even one stock, whereas in case of future contracts, we have to always buy in multiples of lots. Let's try to understand this. As always, I am logging into the trading platform, and from here, this is Sky Trading platform of Zerodha. From here, I am logging in, and I'm going to show you how the difference between equity stock and future contract. For the explanation purpose, I have already added two scripts or two securities in the market watch. I have added Infosys equity and Infosys futures. So I'm going to click on buy on Infosys stock, and I'm going to show you the quantity. So you can see the quantity by default is 1. Okay, so that means you can buy even one stock, and I can also go for multiples of the stocks, 15 or 18 or 145, any quantity you can select here. Okay, so this is how you can change the quantity in case of equity stocks. And you can see I have selected the quantity, I have selected the product as CNC, product type as CNC, which means cash and carry. Okay, now I'm going to explain for future contract. In case of future contract, just click on buy, and you will be seeing the quantity as 500, and you can see the lot as 500. That means I am buying one lot of this particular contract. Whereas if I try to change it to say 501, and it says quantity is invalid, or quantity should be a multiple of the lot size of 500. Okay, so let me check if I can buy one. No, you cannot, because the lot size is 500. So make sure you're understanding this concept. So I can actually take multiple of 500, that is 1000. Minimum is 500. I have taken two lots, then it will be 1000. So the first difference hopefully is clear. Second difference is that in case of equity stocks, you need to have full amount for buying the stocks. So for explanation purpose, I am explaining with respect to 500 quantity of equity stocks and one lot of Infosys futures. So in case of equity stock of Infosys, the price is of 948.6. So what I'm going to do is 500 quantity of equity stock at 948.6. So it is giving you the total value of 4,74,300. This means that for buying 500 stocks of Infosys, you need to have 4,74,300 in the account. Now let's try to understand for future contract. In case of Infosys futures, you can see the lot size is 500. So what I'm going to do is open the margin calculator. So just type zerodha.com. In that, click on menu. In that, you go to margin calculator. You just type equity futures and type Infosys. Okay, so this particular list of contracts has Infosys future contract as well, but it is not showing up. What is the reason for this? The reason is normally wherever you check in the trading platforms or in the margin calculator, anywhere, the complete name of the security is not mentioned. Okay, so the trading symbol of Infosys is INFY. So if you are a beginner, how will you understand the trading symbol of a particular stock or particular contract? Just go to nsindia.com and type Infosys. You'll be able to see that there is HCL Info Systems Limited and there is Infosys Limited INFY. So you can just select Infosys and click on INFY, and you'll be able to get the details of that particular script. So that's why I'm just going to change the script here as in INFY, and you can see the margin required is 60,100. If you can remember, for the equity stock, for buying the same quantity, that is 500 quantity, margin required was around 4,74,000. But for buying similar units in case of future contract, you need to pay only 60,103. So that's why I have made out this point, that is, in case of equity stock, you need the full amount, whereas in case of future contract, you need only the margin, which is around 60,000 for Infosys. But this may vary from different contract. What I'm saying is, this may vary from future contract of one stock to future contract of another stock. So if I, for example, if I select GMR Infra here, then margin required is 1,50,000. If I select for DLF, then margin required is 1,30,000. So based on the type of contract that you trade, or the contract of different stocks, based on that, the margin requirement also will vary. Now go to the third point, that is less risky asset compared to futures, and in case of future contract, higher risk compared to equity stocks. So what it means is, future contract is kind of a leveraged product in itself. Okay, why I'm saying this is because if I go to the Kite trading platform, you can see the price is 952 and the quantity is 500, right? That is 500 into 952. Even here, the worth of the contract is around 4,76,000. But how much amount are you paying for this? How much amount is blocked, or how much amount is required for you to place this order? That is just around 60,000 rupees is required, right? So it means that an asset of or contract worth of 4,76,000, you're buying with only 60,000 rupees in your account. So I always give this example, that it's like, a person who is just weighing 40 kgs is trying to lift a weight of say 200 kgs. So that's what is happening with this particular contract. Asset of, or a contract worth of 4,76,000, you're buying worth only 60,000 rupees in your account. So that's why I was just saying that in case of future contract, the risk is more, as you are paying only the part of the amount to buy the full contract itself. Whereas in case of equity stocks, if I am buying a stock of 948 rupees and the quantity is 500, you need to pay the complete amount, 948.6 into 500. So you need to pay 4,74,300 itself in case of equity stocks. But for you to buy 500 units in case of a future contract, you need to pay only 60,000, as I've shown here. Hopefully this point is clear now. The fourth point I'm going to tell is Demat account. So since buying stocks, you have some ownership with that particular listed company. What happens is, when you buy a stock for a long term, the stocks will have to be transferred to a different safe locker, if you can say so. This particular safe locker we call as Demat account. Okay. But in case of future contract, you're not owning any, you don't have any ownership in that particular company, in that particular listed company. So there's no such arrangements required, right? So that's why there's no need of any Demat account with respect to a future contract. So what I also mean to say is that if at all you buy a equity stock of Infosys for delivery, it means that you have some ownership in that particular company, in that particular listed company. So there's no such arrangements required, right? So that's why there's no need of any Demat account with respect to a future contract. So what I also mean to say is that if at all you buy a equity stock of Infosys for delivery, it means that you have one share worth of ownership in Infosys. And if at all, and it also means that for you to buy this stock, you need to have a demat account. And next thing is, in case of future contract, you're not owning any part of the company because it's just a contract that you are betting on. That's why there's no demat account required. And stocks are usually used for investment purpose. That means you normally invest in stock so that your money will grow, and if the company also grows in the meantime, you can cash in by investing in that particular stock. Okay, so normally in general, or by the real purpose of the equity stocks, it is for investment. Okay, now about equity futures or any future contract, it is existing for you to reduce the risk in a portfolio, or what you can also say is that future contracts, by the nature of the future contracts, should be used only for hedging purpose or for speculation. Speculation means you're just predicting the price is going to be in a certain period of time. That's what we mean by speculation. Okay, and the sixth point I'm going to explain about pledging, right? So you can pledge the equity stocks and get margin amount for trading in future and option contracts. Okay, so just like how you keep your property as security and get loaning is that, or gold, uh, you keep gold as a security and get gold loan. Similar to that, you can pledge your equity stocks and get the amount, margin amount, using which you can buy future and option contracts in general. Okay, whereas future contract or any option contracts or any such contracts, you cannot use them for getting margin amount so that you can pledge. Okay, and one more thing is, if you buy a stock today, you can hold it for a number of years until the day the stock is stopped trading on the exchange. Till that day, you can continuously hold the stock. It may be up to 2 generations or 3 generations. Okay, till the stock is listed on the exchange, you can there's no worry as to what will happen to my stock. Till you hold that stock, it's with you. It's not going to be taken away from you in any way. Whereas in case of a future contract, there is always a fixed expiry. What I'm saying is, if at all I buy a Infosys future contract today, then I have to settle. That means if I buy a future contract today, I'll have to settle the contract by 29 June. So on NSE, for any stock or index contracts, index future contracts, or stock future contracts, there are up to 3 contracts available for trading. For Infosys, for example, I can place orders in June contract, July contract, or August contract. It's up to me. Any contract I can trade. Okay, so let's go to the Kite trading platform and look into this. So Infosys June contract, I'm adding Infosys July contract. Okay, Infosys July future, click on add. Similarly, I can add Infosys August futures. So you can see I can add all these 3 contracts, and it's up to me which contract I want to buy or sell. Okay, so to sum up, I have made list of 7 differences of equity stocks and futures, and hopefully I have made things a bit more clearer to you. I'm planning to come up with more videos, so stay tuned to my channel. Keep subscribing and liking my channel. Okay, thank you for your time.